Top-heavy stock market, day 29, the uncertainty guy. Fasten your seatbelts. I'm going to tell you a little story from my schooling history. I'm not the greatest storyteller, but I think it's appropriate for what's going on right now. In my past, I had to read the Iliad by Homer, and that was not easy at the time. I struggled through it. I tried to be a good student, so I did get through it. But something triggered my memory this week when the last couple days, it's Friday, May 7th, and the stock market hit new highs today. Made me very happy. My accounts look better. Even though I've cut back on stocks, my account was actually was up percentage-wise as much as the stock market was today. The different areas that my assets are in happen to be moved pretty well. So I was happy about that. But in the Iliad, Odysseus was warned, when you hear the sirens singing, don't go near that island. Don't listen to them. Fill your ears with wax and just try and get by that area, because their sweet songs will suck you in, and they're actually two monsters. They're not beautiful women that you think. What are the sirens right now? The beautiful women? People saying this time is different. I've heard that. I'm old enough. I've been through this before, and it's always going to be different. I also heard today that the stock market's like the beginning of the Roaring 20s, and here we are in 1921. Not the same at all. The beginning of the Roaring 1920s, the PE ratio for the whole market was around 11. It's now 32, higher than it's ever been. When markets get top heavy and out of the valuations get too high, they will come back into where they should be. And again, if I were you, I would look at the market capitalization divided by the GDP, and that number should get back to 0.8. It's a lot bigger than that right now. It's going to take a pretty big correction. Is it going to be this year or next year? That is hard to say. I will go out on a limb and tell you what I think. I think we're going to see a top in the next month or two. And how fast it goes down depends on if there's a big event or if people start selling the market just because it's overvalued. I think we will have a large correction at some point. If we have a correction of 50%, we could get back near that 0.8. Even, if the GDP has a move up in the next month or two and then the market pulls back, we might get back to that 0.8 ratio between the market capitalization divided by the GDP. I think there's a good chance that could happen the second half of this year. And I'm not alone, but all I keep hearing now, and it reminds me of so many other times, people keep saying this time is different. It's different. I don't think it really is that different. I think we're going to go through the same old stuff, and then that'll be kind of a rough ride if everybody's still got all these stocks on and the market goes down. Be smart and let me know what you think. See you tomorrow, Dave.